Yeah. Good morning, everyone. Welcome back to this discussion on accounting standards. So, today we plan to continue with our discussion on the revenue recognition. In the previous sessions, we have discussed about AS7. Largely, that was in respect of revenue recognition of the contractors. Okay. In the previous session, we just touched upon this requirement related to AS9. So briefly, we looked at some of the requirements which are there in AS9. So today we plan to cover that part. Okay. I also understand you had a couple of queries in the previous session. So we'll also talk about those queries. Okay. So let me just move on to your queries first of all, quickly. So what I'll do is I'll just share the document. Okay. So I think one of the queries was in relation to AS7. Okay, so wherein you asked me a couple of MCQs, so we discussed. Okay, as around this MCQ 5. Yeah, so the solution is point number D. Okay, option number D. Why? Because the cost which is incurred till date happens to be 360 lakhs. Okay, in this particular question, the requirement of the question while computing percentage completion is that you consider this cost which is certified and not the cost which is actually incurred. Okay. Otherwise, for the purposes of recognition in the books, you will go with the cost which is actually incurred. Okay. So there's a slight disconnect in this question to that extent. Yeah. So this is one. Plus, there's one more query which I received, okay, which was not really related to the topic that we covered. That was in relation to AS22. Okay, I'm not sure as to who asked this. So maybe you can just look at this MCQ2. Okay, so this was about AS22, wherein I was asked about the solution. Okay, this MCQ2. I'll just quickly discuss this part as well. Okay, so now in this question, depreciation as per books as well as income tax is given to you, and the tax rate is also given. So it's a straightforward question. So now let's try to understand the difference. So do we have any timing difference in this? The answer is yes. What is the timing difference? Depreciation as per books minus the tax, 3 lakhs. Okay. Now the question arises that on this timing difference, do we have a deferred tax asset or a liability? Now, because income tax today has allowed higher depreciation. Okay. So that's why in the future, income tax will not allow this much depreciation. So therefore, what will happen in future? My taxable profit will go up, or you can say my taxable income will go up, which will result into a liability. Understood? Which will result into a liability. Okay. So if you apply this percentage or this tax rate on the timing difference, I think the amount is straightforward. I understand the confusion would have been around the asset or the liability. Okay. Yeah. So I'm hoping that this query is also now clear. Okay. So I understand Rojalyn has a query. Yes, Rojalyn. What's the question? What's the query? AS7. Okay. Yes. What's the query? Quickly, please. On AS7, what is your question? MCQ2. Sure. Let me just move on to MCQ2 now. Just give me a minute. I just closed this document. Okay, so let me just present that again. All right, so this, okay. So I think there's some fact pattern which is available. So let's look at that. So it says XY agrees to construct a building on behalf of its client GH on 1st April X1. So it appears XY is the contractor. Yeah. Expected completion time is 3 years. XY incurred a cost of 30 lakhs up to 31st March. So I understand this is the financial year. It is expected that additional costs to complete the work will be 90 lakhs. Total contract value is 112 lakhs. Okay, so we are given the cost which is incurred up to 31st March X2, and the estimated cost is also something you can compute. Why? Because the additional cost to be incurred is also given. As at 31st March X2, XY has billed GH for rupees 42 lakhs as per the agreement. Okay, so that's the invoice which has been raised. Assume that the work is completed to the extent of 75% by the end of year 2. Okay. Now, in this particular case, the question is total expense to be recognized in year 1. Okay, so that's the question it is asking. Total expense to be recognized in year 1. Okay, so now if you look at the question, okay, so it says XY incurred a cost of 30 lakhs up to 31st March X2. Yeah, and the expected, it is expected that the additional cost will be 90 lakhs. So now let's try to quickly compute as to what will be the total cost. Okay, so now if you look at the total cost, it will be 120 lakhs. Okay, so 120 will be the total cost. Now, I'm not sure as to why the work completion percentage has been given to you. So it says assume that the work is completed to the extent of 75% by the end of year 2. Okay, because there's no other information in relation to year 2. I'm assuming that they maybe in respect of this third question, this information has been given. So that's what I can understand. Okay, now the point is that in the first year, what is the cost that you have incurred? So in the first year, XY has incurred a cost of 30 lakhs. Okay, so if it says what is going to be the total expense to be recognized in year 1? Yeah, to my understanding, it should be 30 lakhs because it's straightforward. So there's nothing else you can just, make out of the fact pattern. Yeah, so it should be 30 lakhs. All right. Yeah, so which should be option number A. So that's how you should look at it. Okay, great. Yeah. All right, clear? Okay, so then I understand Pooja Priya has a query. She is asking, please can you discuss MCQ question number 6 on page 8.27? Okay, Hardik, Rojalin, they are saying answer is okay. So let me just look at as to why they have considered a different thing. Just give me a minute. Just give me a minute. So in this particular question, see, I'm not sure as to why they have considered. Again, it's something one will have to look at. To my understanding, it should be. So if you just look at this fact pattern, just give me a minute. So this is 30 divided by 120, 25%, and 112 lakhs into 25%. No, so I would say it should be A. Maybe it's a typing problem. Okay, so that part you can just ignore because you need to look at as to, in the first year, what is the cost incurred. So that's how I'll suggest you should go with this. Okay. Yeah. All right. So no worries. Now, I think there's one more query. So just give me a minute. Just give me a minute. So now, what's the next query? Okay, so Priya is asking about MCQ question number 6. Sure. So if you look at MCQ question number 6, page number 8.27. Sure. Okay, this one? Yeah? All right. LP contractors undertakes a fixed price contract of 200 lakhs. Yeah? Transactions related to the contract include material purchased 80 lakhs, unused material 30 lakhs, labor charges 60 lakhs. Okay. Now out of 80 lakhs, 30 lakhs material is unused. Machine used for the 3 years period is given to you. Original cost of the machine is 100 lakhs. Expected life is 15 years. Okay, so that's why you can also compute the depreciation. Estimated future cost to be incurred to complete the contract will be 80 lakhs. You are required to compute the loss on this contract to be recognized. Okay, so I think this question is more about computing the total estimated cost. Okay, so that is what you are required to look at. Now, quickly, can you please solve this and let me know the answer? I understand Priya has this query, but maybe if others, can you please quickly solve this and let me know the answer? Great. Abhishek, Hardik, they are saying solved. So can you move on to the solution? So first of all, can you please let me know what will be the amount of depreciation? So let me just also calculate this. Okay, so 100 lakhs is the original cost and there's no residual value, it appears. Okay, so if you look at 100 lakhs, okay, machine is going to be used for 3 years for the contract. Yeah, so 100 divided by 15. So per year depreciation you can compute. Okay, so what is the depreciation that you are going to get in respect of machine? Okay, Pranav says 6.66. No, you will have to consider that for the project. 6.66 into 3. So that means 20 lakhs. Yeah, so that is one cost for you. 20 plus you have labor charges 60. Labor charges 60. So that makes it 80. That makes it 80. Yeah. So you have 60 lakhs of the labor. Then you have 20 lakhs of the machine. Then you have further 80 to be incurred. Yeah. Now, in respect of material, even though you have purchased material worth of 80 lakhs, but 30 lakhs of worth of material is unused, that is inventory. So can we say it's an expense? No. So that's why what should be the cost corresponding to material? 80 minus 30. 80 minus 30. Yeah. So it will be 50 lakhs effectively. So what is your total cost in the given case? Can you tell me what is your total cost? I'm just hoping Priya, you are also trying to solve this alongside. So what is the total cost? 210 lakhs, correct? 210. Now, if you look at the question, now in the question itself, they are not asking you whether there is a loss on the contract or not. Okay, question is not asking you whether there is a loss or not. In a way, question has clarified that there is a loss. You just need to comment as to what is the amount of loss. Okay, so that is good. So at least that part of confusion is not there. So now, what is the amount of loss? If the total cost to be incurred means total estimated cost is 210 lakhs, and if the contract revenue is 200 lakhs, so what will be the loss to be recognized? 10 lakhs? Yeah. So to my understanding, again, the answer should be B, 10 lakhs. Okay. Maybe you can just check the solution later on, but to my understanding, it should be B. Fine. Ankit is asking to show the calculation. So I didn't really solve this, but if you want, I can just move on to the calculation also quickly. Okay, please remember the components. So what I'll do is for Ankit, I can just try to move on to the calculation. Okay, because it's a very small calculation, so that's why I didn't. Okay, so now as far as the future cost was concerned, I understand it was 80. You can just keep letting me know in case I miss out on something. Okay, labor cost actually incurred, I understand that was 60, correct? Yeah, so these are rupees in lakhs. Okay, then on the material, what did you have? Actually incurred less inventory. So what will you say? 80 lakhs less 30. So net net, what do you get? Net net you get 50. Correct? Yeah. So I'm just not having the access to the question right now. So you may just correct me if at all anywhere I'm not putting the numbers correctly. Okay. Then I think machine was depreciated. Okay. So depreciation of machine. Now the life of the machine was 15 years. So we'll say 100 divided by 15. So this will give you the per annum depreciation for every year. Multiply with 3. Why do you multiply with 3? Because machine is going to be used for the contract for 3 years. Okay. So depreciation for 3 years you will consider. Yeah. So the total estimated cost will be what? Sum of all of these. Yeah, sum of all of these. So this is going to be a total estimated cost. And what is the contract revenue that is given to you? Contract revenue is given to you. That is 200 lakhs. Okay. So therefore, you will say foreseeable loss on the contract. What is the foreseeable loss? That is your total revenue less total estimated cost. Okay. This is total contract revenue. Understood? Yeah, clear? So I think you wanted to look at the calculation. Hopefully you have been able to understand. Yeah. All right. Everyone clear? Clear? Everyone? All right, great. So now I think we can move further. Yeah, maybe if still have some more questions, doubts, we can pick that slightly later. Maybe towards the end of the session, I'll just reserve some time once again. Okay, so now let's move further. Let's talk about AS9. Okay, so let's come back to AS9. Now, in relation to AS9, we discussed that AS9 deals with the recognition requirements of the revenue in relation to the contracts which are other than construction contracts. Correct? We also talked about the sale of goods, rendering of services, interest, royalty, dividend, all of these things which are covered therein. We also talked about inter-unit transfers that you'll just ignore that. That should not be forming part of the revenue. Okay. Now, as regards the revenue recognition as per AS9, there are two conditions which are required to be fulfilled. Okay. Now, what are those two conditions? One, in relation to the goods, risk and rewards which are attached to those goods should get transferred to the buyer. Okay. only and only when the conditions that we are discussing will get fulfilled, the revenue can be recognized. Otherwise, not. Now, this is very, very important. Huh? Otherwise, you can't recognize revenue. And we'll talk about it with the help of some examples. Okay. Now, what do you mean by transfer of significant risks and rewards to the buyer? Because that may be a question. That what do you mean by that? It means that if tomorrow, if let's suppose seller has sold the goods, moved the goods from his location, and maybe the goods have not reached the location of the buyer. Now, in this case, there's a risk. What's the risk? That goods may be lost. So, I'm not saying that they will always be lost, but a risk is there. Huh? Or maybe some of those goods are damaged for any reason. Huh? Now, the question arises that during this period, seller has sold or seller has transferred, but the buyer has not received. So, who will take up this risk? That is what you call as risks and rewards which are attached to the goods. If the buyer happens to be the party who has taken up this risk, that is when you say that the significant risks attached to the goods have got transferred to the buyer. Number one. Number two, in relation to the sale of the goods, what is going to happen? If let's suppose A will sell goods to B, so in return, B will make the payment. Yes or no? B will make the payment. So there will be a consideration which will get transferred from B to A. From B to A. Now in this case, today when the sale is taking place, as around this consideration, there should not be any uncertainty. So the standard says there should be no uncertainty of collection. Okay, which means seller should be assured that the money will be received from the buyer. If the seller is not assured about the money to be received, okay, so you may have a question, sir, why would the seller make the sale then? Of course, but if let's suppose seller has sold the goods worth of rupees 100, but as around rupees 2 there is a doubt, so what will happen? Can you recognize revenue for 100? No. You will recognize revenue only when you will say there is no uncertainty of collection. Okay? Yeah. Now, please remember, every time revenue recognition has to take place, these conditions are required to be looked at. Okay? And accordingly, the revenue should be recognized. Okay, now Hardik has a question. Hardik is asking that this provision for bad and doubtful debts, that may also come. Yes, you are right. But that's a second stage. The recognition of provision for bad and doubtful debts will happen subsequently. Subsequently means once you have recognized the sale. So what will happen? You will have a debtor. Now, in respect of debtor, you will check whether you will receive the money or not. But that's going to be a later stage. You will not do that immediately when you are entering into a sales transaction or when you are executing a sales transaction. Okay. Why? For that purpose, you need to have a debtor. But we are talking about a situation wherein the debtor doesn't exist. So the question is whether you want to recognize the debtor to that extent by booking the sales, by recognizing the sales or not. Okay, so we are talking about the day when you are executing a transaction, and that is when you want to check whether this particular transaction should be called as a sales or not. Okay, because if you call that it's only a transfer but not a sale, then you will not recognize sale, you will not recognize debtor. Okay, so that's the point we need to look at. Yeah. Okay, Sai has a question. No provision for bad debts, only write off. In case of banks, only provision allowed. No, so here again, I think you're just trying to mix up a few things. One, as I just explained, that currently we are talking about revenue recognition. Okay. So whether you talk about provision for bad debts or write off, see, all of these things will come later on. They are not really relevant as on today. Number one, to begin with. To answer your question that whether there will not be any provision for bad debts, it's only there in case of banks, this is not correct. Okay. So even for companies, entities other than banks, there can be a provision for bad debts. It's not necessary. And in fact, write-off is a completely, you can say, it's the last stage. Okay. When you are 100% assured that the money is not going to come back. So that is when you will take the step of write-off. Otherwise, you will always keep a provision. Okay. So that's how it works. Understood? Sai, clear on this? Yeah. Hardik is clear. All right, so now what we can do is we can just look at some questions. Okay, so now just a minute, let me just open that document. All right, so we can look at some small examples now. Entity XY sells a machine being used at its factory at a price of rupees 2 lakhs. Okay. The carrying value of the machine is 1.8 lakhs. Sale of the machine does not increase the revenue of XY, but is an example of capital receipt since the transaction doesn't take place in the normal course of business. Such gain on sale of rupees, such gain on sale, okay, which is rupees 20,000, is recognized as a part of profit and loss under gain or loss on disposal of asset. Okay, so now in this particular example, what you need to understand is that something which is sold by the entity, which is in the ordinary course of business, okay, which is in relation to the inventory, that is what you call as sale. Now, let's suppose entity XY has the business of, say, trading into furniture, or let's suppose manufacturing furniture because they have got a machine. Okay, what is the nature of their business? Manufacturing of furniture. So ideally, what should they be purchasing and selling? Raw material and selling the furniture. If let's suppose they are selling any item of their PPE, property, plant and equipment, what is that? Machine. So can we say that it's the business of XY to sell the machines, PPE? The answer is no. But because these items have been sold off and whether they result into a gain or loss, so you need to recognize that gain or loss. So where will you recognize that? That will go to P&L, yeah, but that will not be called as a sale. Understood? So sale means sale in the ordinary course of business. Yeah. Okay. Next example. Okay, great. Hardik is saying to this transaction AS10 will apply. Absolutely correct. So AS10 guides you in relation to this particular account. Yeah. Next example. ST Limited is a real estate developer and a builder. Okay. It is into the business of buying and selling properties. In 2000X1, ST Limited purchased a unit of land for rupees 150 crore. It sold off that land after a few months at a price of rupees 240 crore. Land purchased 150 and sold off at 240. In the above case, sale of land is a transaction that happens in the ordinary course of business. Why? Because that's the business of ST Limited. What is the business? To buy property, sell those. To buy land, sell those. Okay. Hence, in this case, what will be the amount of revenue? Should that be the difference between the sale price and the cost or the total sale value? What do you think? Total sale value? Total sale value? Yeah, that's what Pranav says. Yeah. AS7 construction contract will apply. No, construction contract will apply when the contract involves significant period of time. Please go back to AS7. So it's a good point you have picked up. When the contract involves significant period of time. Remember we discussed that. In this case, you are purchasing land and selling it. So is there anything in relation to the contract or is there anything that requires any sort of construction? Is there anything that requires any sort of construction? The answer is no. So that's why what will happen? That will not meet the criteria of construction contract. Okay, so it's a plain contract, plain vanilla contract falling under AS9. Understood? Clear? Yeah. Okay. Clear on this? All right. So let's look at one more example. DL Limited is a pharma company. It's been conducting research on new medicine since last 2 years to increase the immunity levels of the people consuming it without any side effects. During the current year, it decides to sell the outcome of the research undertaken so far to another competitor, GH Limited, for rupees 50 crore. DL has already incurred rupees 30 crore on the ongoing research. In the above example, what do you think? Should this 50 crore be recognized as revenue? Over to you. Yeah, I understand solution is given, but still apply your thoughts. Apply the concept that we have been discussing. What do you think? What do you think? Should this be recognized as revenue? Over to you. Should this be recognized? Okay, Tanu says no. Great. Dilip says yes. Beshri says no. Galaxy is saying no. Okay, Asta says no. Ankit is saying no. Nitin is saying no again. Hardik is saying no. Kasak, Priya. Okay, Kasak says no. Priya says yes. Okay, great. So, Priya, can you tell me why it should be yes? Okay, some of you are saying yes. Can you just also help me understand the rationale? Why do you think it should be yes? Sukhveer says no because it doesn't relate to the ordinary course of business. Neeru says no. Yes, over to you quickly. Why do you think it should be yes? Okay, Kasak says anticipated gain should not be recognized. All right. Now, in this particular example, please remember, see, if you look at any pharma company, okay, What is going to be the nature of the business of the pharma company? To manufacture medicines and sell them. Yes or no? One can argue that R&D which they carry out, that's something which is very normal for a pharma company, because R&D is something which they do 365 days in a year. Okay, so to this particular industry, R&D is quite common. Yes, that is absolutely correct. But can we say that the nature of business of a pharma company is to carry out a research and then sell the research? No. Why? Because they will carry out a research to develop a product. A research is carried out so that the product can be developed, which can then be sold. Yes or no? In this particular case, research which is still in process, which is not yet completed, has been sold off. So, irrespective of whether the research is completed or not, if that is sold off, can we say that the pharma company has a business of getting into a research and then selling it off? No, we can't say that. In fact, that is not something which a pharma company will do. Yes or no? So that's why in this particular example, because the sale has taken place, so that's why income will be recognized, gain will be recognized, but that will not be as per AS9. That will not be the revenue. Understood? Understood? Now, can you tell me one more thing? That if let's suppose you have this type of gain, so how do you present that in the P&L? So where do you present that in the P&L? Yes, tell me. Where do you present that in the P&L? Tell me. In the P&L, you'll show this. Great. Asta says it will be shown as part of other income. Yeah, very good. Of course, because in the P&L, after revenue, you can show any other income that you have. Yeah, so some of these incomes that you generate, these will be called as other income. Okay. Okay. So these will be called as other income. Yeah. Clear? Okay. So Pranav has a question. So Pranav is saying, so the gain on sale of asset will also be part of other income? Yes. Yes. Okay. All right. So now moving on to the next part. The next concept is quite interesting. So we'll talk about this principal agent understanding, principal agent relationship, which is also at times called as gross versus net basis of recognition. Yeah. Now, we'll try to help this concept with the help of an example. Okay, so let's suppose there are three parties. We have A Limited, then we have C Limited, and we also have B Limited. Okay, so let's try to understand the context first. Then we have B Limited. Okay, now say A has sold goods worth of rupees 100 to B. Okay, and these goods have in turn been sold to C, say for rupees 120. Yeah. Now the question is around the revenue recognition of B. Okay, so we are not talking about A here. Please understand, we are not talking about A. For C, it's a cost. So that's why C is not relevant. So we are looking at the revenue recognition or the books of B Limited only. Okay. Now, what is the context? See, there are two ways this revenue recognition can be looked at. In the books of B, one option is B can record a purchase of rupees 100 and then a sale of rupees 120. Yes or no? Yes or no? So let me just call it as option number one. So this is option number one. Okay. Another option is there for B. Now we'll discuss as to why these have become options for us. Another option is also there with B. What's the other option? That B will simply recognize a sale for the net margin which is earned. What's the amount of net margin on this transaction? Can you tell me? 20. Correct? Yeah. So B will recognize a margin of rupees 20. So as far as purchase is concerned, there's no purchase for B. It's only a margin. Okay. Now, in this case, the accounting which you do, this option A, which you follow, this is called as accounting wherein B will be considered as the principal. B will be considered as the principal. And if in case B is considered as the agent, then the accounting will be required to be done as per this option number 2. Okay. Now, instead of calling it as option, let me just create two situations now. Because this is not optional. Let me just call it as a situation now. Okay, so which means that currently we are looking at the context or the concept wherein we need to assess whether B is acting as the agent or the principal. Why? Because accordingly, revenue recognition of B will change. Yes or no? Yeah. So that's why in this particular situation, what is important for us to understand whether B is acting as the agent or the principal. Yeah. So now in this case, some of the considerations that you need to have for this revenue recognition. One, who carries the inventory risk? Now, what is inventory risk? These goods which have been sold by A or B to C Limited. Let's suppose if these goods are lost, these are damaged, then who will bear this risk? Will it be A or B? Will it be A or B? Because if B says no, this is not my inventory, I don't carry this risk. What is my role? To transfer these goods. So these goods may be routed from B to C, or they may transfer from A directly to C. It doesn't matter. Yeah, both the situations are possible. But who will bear this inventory risk? If B says it's A and not B, then in that case, what will you say? B is acting as the agent and not the principal. Okay. Another way, who will have the risk in relation to the debtor? So let's suppose now goods are sold to C. But in future, let's suppose C doesn't make the payment. Then what will B do? If B says that I'll make the payment to A only if I receive the payment from C, in such a case, who is carrying the debtor risk? Who is carrying the collection risk? Can you tell me? In such a case, who is carrying that collection risk? Larry says A. Yeah. So in such a case, B will be considered as the agent and not the principal. Okay. Another situation. Now, whether these goods will be sold to C at rupees 120, 130 or 90 means who will decide this price at which the goods will be sold to C limit. If it's A and not B, in that case, what do you say? That B is acting as the agent and not the principal. And if B is acting as the agent, so should B record a purchase and then a sale? No. Why? Because B will get a commission income, or you can say the margin. Yeah, that is what is you call as the revenue of B. Understood? Understood? Yeah, so this is the concept of agency relationship. Everyone clear on this? Yeah. All right. So now, as around this concept, we will look at some examples. Okay, so now you can just look at this illustration 1. Okay, you need to solve this. Zigato runs a food delivery business. As per the arrangement, Larry, I'll come to your query. Just give me a minute. Zigato runs a food delivery business. As per the arrangement, Zigato allows customers to order food from local restaurants and is responsible for the delivery of the food within the stipulated time. During a particular year, it collects the money on orders made online as under. Okay. Total price for the food item 200 lakhs. Delivery charge was 60 lakh. GST was 40 lakhs. Total was 300 lakhs. Okay. Zigato has received 300 lakhs for the above orders from the customers, and the orders were delivered to the customers in stipulated time. How much revenue should be recognized by restaurants and Zigato? So in this question, there are two parties for whom you need to comment. Okay, so you can just look at the solution. In the meantime, I'll look at the query of Larry. So Larry asked me, sir, what happens when there is a Del Cadre agent and the principal relationship? See, every time when you have a agent principal relationship, so this is how you are required to look at it. All right, so now moving on to the solution. Okay, Nitin is saying for Zigato, it should be 60 lakhs. For restaurant, it should be 200. What about others? Over to you. Priya is saying Zigato is the agent because A has the responsibility. I think you mean to say restaurant has the responsibility. Huh? Okay. So what is the amount of revenue for Zigato and restaurant? Okay. Balesh is saying restaurant 200, Zigato 60. Dilip, I think, has the same answer. Priya is saying 60. Okay. Ajay Surya says restaurant 200, Zigato 100. Okay. Very good. Asta says 60 for Zigato. Hardik says for Zigato it should be 60. Sukhveer is saying Zigato 60. 170 for restaurant. Oh, very good. So I can see different answers coming up, which is good. Okay, of course, we can discuss all of those sort of responses you have been sharing. Okay, Nitin is saying restaurant is not responsible for the delivery. All right. Pranav says restaurant 200, Zigato 60. Dilip, I think, is talking about Zigato. So Dilip says Zigato is purchasing 200. Okay. No, but I'm asking you about the revenue for both the parties. Purchase is not required. Okay. Malu says Zigato 60, Restro 200. All right. Now let's look at the solution. See, as far as restaurant is concerned, do we have any doubt in relation to the revenue recognition? No. For restaurant, it's very, very simple. What is the responsibility of the restaurant? To sell food, for which restaurant will get 200 lakhs. As simple as that. Yeah. Because delivery is not the role of restaurant, so we should not get confused with that. GST anyways doesn't form part of revenue. Okay. So I think revenue recognition for restaurant is quite simple. It will be 200 lakhs. I'm not sure as to why some of you were looking at 100 lakhs or 170. I'm not sure where that number has come from. I think the assessment in this particular question was only in relation to Zigat. Yes or no? Well, that's the only thing which you are required to assess. And what that assessment requires is to find out whether Zigato is the agent or the principal. See, irrespective of whether Zigato is agent or the principal, sale of restaurant will always be 200. If let's suppose you call Zigato as the principal, so what will happen? Zigato will have a purchase of 200 and sale of 260. Why? Because GST doesn't form part of revenue. So in such a case, what will Zigato do? Record a sale of 200 plus 60 for delivery. But if in case Zigato is the agent, then its sale will be only 60 lakhs. Only 60 lakhs. Correct? Now, let's try to understand what is the role of Zigato. So Zigato is responsible only for the delivery. Only for the delivery. Clear? Therefore, Zigato is acting as the agent. Therefore, what should be the amount of revenue which Zigato will recognize? Only 60 lakhs. Only 60 lakhs. Clear on this? Yeah? Clear on this? Correct. Okay, so let's look at some more examples. We have got one more example on this. TripDeal is a website that allows people to book airline tickets. Okay, TripDeal is a website that allows people to book airline tickets. As a part of the business, it agrees to buy 100 tickets from an airline on a particular date and resell those tickets to the customers. However, it's TripDeal which bears the loss for any unsold tickets. Now, this is very, very important. In the above example, the risks and rewards relating to the tickets are borne by TripDeal and not the website. Hence, sales made for the tickets will be fully recognized as part of its revenue. Okay. Now, when you talk about trip deal in this particular example, what do you think? Whether trip deal is acting as the agent or the principal? Tell me. Whether trip deal is acting as the agent or the principal and why? Okay, Vismita says principal. So can you tell me why Nayan says principal? Great. Why? Tanu says agent. Okay, again, can you tell me the reason why? So why do you think? Okay, Ajay Surya says principal because trip deal is bearing the risk. What is the risk? Priya says because trip deal has purchased the tickets. Okay. Pranav says trip deal is acting as the principal because it is bearing the risk of inventory. Now, in this particular example, very good. I can see a lot of responses coming up. In this particular example, there is an inventory. What is the inventory? Tickets. So, as per the arrangement, every time, what is it that the trip deal is doing? Trip deal will buy the tickets and sell that. Now, it's not a case wherein TripDeal will say to the website that these are your tickets. Even if I buy, I'll not be responsible if these are unsold. Why? Because tomorrow, if these remain unsold, then who will bear the loss? TripDeal. So that's why, in respect of this inventory, who is carrying the risk? TripDeal. Yeah, it's TripDeal. So that's why in this case, trip deal is acting as the principal and not the agent. Therefore, what should be the amount of revenue which trip deal should recognize? Should it be limited to the margin on the sales? No. It will be gross basis of recognition. Means whatever trip deal will purchase, that will be recorded as purchase. And all the sales amount which trip deal will generate, that will be recognized as the revenue. Yeah. Nancy is saying trip deal is the principal. Yes, very good. Yeah. Clear? Everyone? Everyone clear on this? Clear? Okay, so I can see this query coming up. No, so all right. So now moving further. Now what we'll do is some of these things that we have discussed so far, we'll look at some illustrations around it. So I can see we have one illustration. In fact, we have a couple of illustrations. Huh? So let's look at some illustrations. Huh? Okay. All right. So now moving to this illustration 2. AB sells AB sells goods to CD on 1st March X1. CD is having significant cash flow issues since the last few months. Cash flow issues means money is a problem for CD. However, it is trying to raise funding through bank loan to be able to run its operations in future. So we are talking about CD here. Huh? Okay. On 5th May 2000X1, CD is able to seek the funding and is expected to be able to pay for the goods in future. Okay. Now, at the time of sale, which AB has executed to CD, it is difficult for AB to ascertain whether it will be able to collect the amount from CD due to poor financial conditions. you are required to comment on the revenue recognition by AB to CD. Over to you. Yes, tell me about revenue recognition. Please remember, you don't look at the answer, because we have discussed the concept. So try to apply this on your own. Rachana is saying we'll deduct the purchase price from sale and that will be the revenue. Okay, so you are applying that principal agent relationship. Okay, Nitin is saying AB should be recognized. Ajay Surya is saying recognize revenue. So what do you mean by that? Hardik says will not recognize it as the consideration is uncertain. Now, please don't get confused. We are not always talking about agent or principal. So every time you have a question, okay, so the in the exam you will not get to know whether you discuss the topic of this agent relationship just now, and that's why that question should be asked. So it will be a mix up. So currently we are not talking about agent principal anyways. Okay. I think once again I got this response from Galaxy. So Galaxy is saying it should be recognized as principal. Very good. But the point is, what will be the basis of revenue recognition? Ajay Surya says AB can recognize revenue. Okay. Asta says AB should not recognize revenue on 1st of March. Instead, it should be done on 5th of May. Tameshwari says revenue should be recognized because responsibility of the goods is there with CD. So CD should be recognized. Oh. Priya says revenue will be recognized when it is incurred. I think I'll have to just explain this question because it seems you have mixed up various concepts you have mixed up. All right, so now let me just help you understand the question first of all. It appears question is not clear to you. Now, please remember there are two parties, AB and CD. Okay, so these are the two parties. AB has sold goods to CD. Okay. When did this happen? This happened on 1st of March 2000 X1. Now tell me one thing, in this particular example, can CD recognize revenue? I could see some responses from you. Can CD recognize revenue? Who is CD? Can you tell me who is CD? Who is CD? CD is the customer, buyer. So who will recognize revenue? Seller or the buyer? Who will recognize revenue? Seller or the buyer? Seller always. Yeah. So when you are saying that CD will recognize revenue, it clearly shows that you are confused right now. Okay. Yeah. So at least that part of confusion is gone now. No. Lot of responses I saw wherein you mentioned that AB will be the principal, AB should recognize revenue as the principal. That is absolutely correct. There is no doubt about it. But please try to understand the requirement of the question. See, on the basis of the fact pattern which is available to you, does it appear to be a question wherein you are required to do principal agent relationship assessment? Tell me, on the basis of the fact pattern which is available, will you consider to be a question wherein you are required to assess principal or agent? The answer is no. Answer is no. Why? Because very clearly, in this case, we will say that AB is the principal. Why? Because the question itself says AB is selling goods to CD. and there's no other party from which AB is purchasing that which has been mentioned. Otherwise, they would have mentioned that. Okay. So, is this aspect required to be considered? No. No. So, now what is the focus or what is the point which the question is trying to test? Question is trying to test your knowledge as around the basis of revenue recognition, or you can say conditions of revenue recognition. What are the two conditions for revenue recognition? Can you tell me? What are the two conditions for revenue recognition we discussed? Can you tell me quickly? What are those two conditions for revenue recognition? Yes, quickly. Apoor says sale and consideration. Very good. Larry says risk and reward should get transferred to the buyer. So that is first. Very good. Vismita has the same response. Hardik says there should be no uncertainty of collection. Yeah. Now that is the part which is getting tested in this particular question. Yeah. So that's why, according to the requirement of the question, you should answer this. See, the question has given the information that this buyer doesn't have adequate funds on 1st March. What does it mean? That on 1st March, will AB be clear as around the consideration to be received? If buyer doesn't have the funds, it says buyer is on the lookout for funds, searching for loans. So can we say that on 1st of March, AB will be clear that the money will be received from the buyer? Tell me, can we say that? Can we say that? The answer is no. So the point is, can we recognize revenue on 1st of March? The answer is no. On 1st of March, there is no uncertainty of collection. Can we say that? No. So if you can't say that, will that criteria be fulfilled? No. So will you be able to recognize revenue on 1st of March? No. But you may have a question now. You may say, but sir, the goods are actually transferred from AB to CD. So if you don't recognize revenue, what do? You'll have to wait. In this case, you will have to wait. Up to what point? You will have to wait up to 5th of May 2000 X1. Because on this particular date, AB becomes assured because the position of CD is improved through funds. Okay. So that's why on this particular date, on 5th of May, revenue can be recognized, not before that. Clear? On 5th of May, X1, the revenue can be recognized, not before that. Clear on this? Everyone clear? Yeah. So every time there is a question, you should not assume that the concept we just discussed, the same concept is going to be asked in the exam. Okay. You need to look at the requirement of the question. Larry is asking, sir, can we not record the revenue, and if later not record, we can create a provision? See, you can always do that. But the problem is that recording of revenue recognition requires two conditions to be fulfilled on the day when you execute the sale transaction. Now, in this particular example, if let's suppose I change the fact pattern, if let's suppose the fact pattern was something like this, say on 1st of March 2000 X1, goods were transferred, sale took place, and on this date, CD had enough funds. Okay, fund position of CD was not bad. Okay, then what will you do? You will recognize revenue. Now let's suppose after 30 days or after 10 days or after 15 days or after 5 days, let's suppose fund position of CD got deteriorated. Say on 10th of March, position of CD got deteriorated. In this case, one can argue that now because this position has deteriorated, so that's why even if the sale is recognized, a provision should be created for those debtors. Okay. But if on the date of sale itself, the position is bad, then what is the purpose of recognizing sale? That will be inappropriate. That will be inappropriate. So why to book the income and then get on to the booking of loss? Unnecessarily you are recognizing revenue, unnecessarily you are inflating your revenue when you are clear that the money will not be received. Yeah, that's not logical, that's inappropriate. Okay, so that's why you will not consider that. That's why you will not do that. Okay, then I think Ajay Surya has a question. He's asking, sir, as per accrual, income received is not important. Then why do we wait till May? All right, so now here again, Ajay Surya has a very valid point. He is saying, sir, in this particular situation, we are waiting till 5th May. Why? Because on 5th May, income is received. Okay, it appears as if payment is made by CD to AB. But can you tell me, is this factually correct? That on 5th of May, CD has made the payment to AB and that's why we have deferred this revenue recognition? Tell me, over to you. Do you think that has been the case? The answer is no. On 5th of May, CD is not making any payment to AB. On 5th of May, we are still applying the accrual concept. The only thing which is changed on 5th of May is that CD has got some funds. Okay. Funds are received by CD, not AB. So we are not following cash basis of accounting. We are not following receipt basis of accounting. No. Understood, Ajay? Yeah. Okay. So had it been a case that payment was made by CD to AB on 5th of May, we would not have considered that. Okay. So we are still on the accrual concept. Okay. Everyone clear? Yeah. All right. So now we can just, I think, look at one more situation. Okay. So let's look at one more example. And then we'll take a break. Okay. So now moving on to next example. Okay, so this illustration 3, let's look at this. AB sells goods to CD on 1st January X1 for 2 lakhs. After the sale was made, CD is having significant cash flow issues. Now, please remember, in this case, the fact pattern has got slightly changed. It is trying to raise funding through bank for its operations. Huh? However, it is unable to do so and has gone into liquidation on 15th of March X1. So it appears to be that case scenario which I tried to discuss with you. Huh? So it appears to be very much on the similar lines. Okay, great. However, at the time of sale, there was no reason for AB to believe that it will not be able to collect the money from CD in future. Now, in this case, you are required to explain how this above scenario will be recognized. Okay, yeah, over to you. So, what should we do? Okay, Nitin is saying bad debts. So, what do you mean by bad debts? You can just clarify, huh, please. What do you need by bad? What do you mean by bad debts? Quickly, over to you. Okay, Larry says AB will recognize revenue 2 lakhs and later on create a provision. Pranav says at the time of sale, AB will recognize and because the revenue recognition criteria. Ankit says recognize revenue on 1st January. I think this is the situation that we have already talked about just now. Yeah. So now in this case, what will you do? So if you go back to the working files, let me just look at it. So this is clearly this situation we just discussed. Now in this case, we understand on 1st of January, goods have been sold by AB. On this particular date, is the revenue recognition criteria met? Yes. So therefore, what will AB do? AB will recognize sale. So AB will say debtor debit to sales. What is the amount? 2 lakhs. Now, after 1st of January, if the financial position of the buyer is deteriorated, so we understand buyer has gone into liquidation on 15th of March. On 15th of March, buyer has gone into liquidation. So what does it mean? That the money will now not be recovered from the buyer, or the chances are, completely reduced. So now in this case, what will you do? Because they have gone into liquidation. So that's why in respect of this debtor, bad debts will be recognized. Yeah. So CD will book the loss. Bad debt debit to debtor. To debtor. 2 lakhs. 2 lakhs. Okay. So where should this go? So this will go to P&L. This will go to P&L. Clear on this? Everyone clear on this? Yeah. Now in this particular example, please remember that on the date when the sale has taken place, revenue recognition criteria was fully complete. So it was met. Why? Because there was absolutely no doubt as regards the recoverability of this 2 lakhs. Had this been a problem on 1st of January, then again we would have followed the same methodology of not recognizing revenue or maybe cutting down on the recognition of revenue. But it was not so. So that's why in this particular case, what do you do? You will have to just follow the revenue recognition completely. Okay, clear? Now, any questions so far? Any doubts so far that you have? Quickly, any questions, any doubts that you have? Over to you. Everyone clear so far? Yeah? All right. So I think we can take a break then. I'm sure you will be looking for the break. Tambeshwari is asking on 31st March, what do we do? Nothing. Continue with the same accounting which has been done. Nothing additional is required to be done because your accounting is completed. So you'll just carry that. As simple as that. Yeah. Okay. So let's take a break and we'll continue our discussion after the break. Huh? So Nisarg, we can take a break. Huh? Nisarg, we can take the break. Nisarg, you're there. Nisarg, you're there. Ajit, you're there. Okay, great. I welcome back. So let's continue. All right. So now moving on to the services. So far, a lot of things that we have discussed, they were in relation to the sale of goods. Okay, though the concept around the recognition of revenue in relation to the services, it's similar. But in this case, standard talks about two methods. One is percentage of completion method and second is completed contract method. Now, please remember that percentage completion method is exactly on the similar lines that we have discussed in AS7. Now, what is this completed contract method and what is percentage of completion method? See, at times, the terms and conditions between the buyer and the seller could be such wherein till the contract is not completed, risk and rewards in relation to that contract will not be taken up by the buyer. So buyer may say that only when it's fully completed, I'll accept that. So that is when you say it's a completed contract method, in which case revenue cannot be recognized till the time contract is fully completed. Otherwise, what will happen? You'll just move on a proportionate basis as far as revenue recognition is concerned. Okay, so that is one of the perspective you need to always remember in relation to revenue recognition of services. Now, there are three more things which the standard talks about, three more types of income which the standard talks about. One is on the interest income. Now, interest income, standard says you'll recognize on the basis of time, mean in proportion to time. So say for example, company has given a loan on 1st of March for 3 years. Now from 1st of March up to 31st March, during this financial year, the proportionate period that you have, 1 month, for this 1 month, income is required to be recognized. Okay. Similarly, if you talk about royalty, on royalty, the standard says once again, what will you do? You will assess that what will be the basis of accrual of royalty income. On accrual basis, you will recognize royalty income. Third, dividend. Now, dividend income will be recognized when the right to receive the dividend income is established. Okay, which means when you are sure that yes, dividend will be received. Okay, right to receive that dividend payment is established. So we are not saying when the dividend payment is received. No, when the right to receive payment is established, that is when the dividend income will be recognized. Okay, now we can look at some examples around some of these aspects as well. All right, so now moving further. All right, so let's look at this illustration 4. During the year ended 31st March X1, ZX Enterprises has recognized rupees 100 lakhs on accrual basis, which is the income from dividend on units of mutual fund held by it. Dividend on mutual funds were declared on 15th June 2000 X1. Dividend was proposed on 10th April X1. You are required to comment on the accounting treatment. Over to you. What do you think? What do you think? You are required to comment on this accounting treatment. Yes, over to you. Yes, quickly, huh? So in relation to dividend, please remember it will be recognized when the right to receive payment is established. So out of these dates, 31st March, 10th April, and then I think sometime in June. When do you think right to receive payment is established? Over to you quickly. All right. So Rachna say, sorry, I've been missing your responses. Okay, Rachna says recognize on 15th April. Dambeshwari says 10th April. Dilip is saying 31st March looks okay. Ankit says it's 15th June. Okay, Priya and Sukhveer, they are saying 10th April. Vismita says 15th June. Okay, what about others? Quickly, Abhishek says 15th June. Okay, now please understand when it comes to revenue recognition, okay, which is in relation to the dividend. Dividend was proposed on 10th of April. Okay, and this was declared on 15th of June. Till the time the dividend is not declared, can we say that the right to receive that payment is established? The answer is no. Till the time the dividend payment is not established, will it be appropriate for the receiver or the party who has earned that income to recognize that? No. That's why the current accounting treatment wherein the dividend is recognized on 31st of March is clearly inappropriate. Now the question is, if 31st March is incorrect, when should this be recognized? Because many of you mentioned 10th April, many of you mentioned 15th of June. Now please remember, when the dividend is just proposed, it's not approved by the shareholders. So till the time it's not approved by the shareholders, a right to receive that dividend is not established. So that's why when should this dividend income be recognized? On 15th of June, not before that. On 15th of June, not before that. Clear? Clear on this? Yeah? All right. One more example. Illustration 5. Y Limited used certain resources of X Limited. In return, X Limited received rupees 10 lakhs and rupees 15 lakhs as interest and royalty respectively from Y Limited. Okay, so Y Limited has paid the consideration in two forms. One is the interest, second is the royalty, or you can say X Limited has earned two types of income, interest and royalty. Okay, so this is during the year X1, X2. You are required to state whether and on what basis these revenues can be recognized. Over to you. Over to you. Whether on what basis these revenues should be recognized. Quickly. Vismita says time basis interest, accrual basis royalty. I think same is the response from Balesh, Larry, Hardik. Very good. Yeah. So in the given case, what do you think? Whether this basis of recognition which has been adopted, is that appropriate or not? What do you think? Is the basis of recognition which has been followed, what do you think? Is that appropriate or not? Over to you. Will you consider that to be appropriate or not? Yes or no? Yeah, that is clearly okay. Asta says yes, it's clearly okay. Pranav says it's appropriate. Yeah, Rajesh has the same answer. Great. Now, moving further. Okay. So now some of the things that we have discussed, if we have to just quickly recap. Okay. So that was about conditions for revenue recognition in respect of sale of goods or the services, Then we also talked about interest. We also talked about royalty and the revenue recognition criteria for dividend. Okay. Now, see broadly, if you will say revenue recognition. So these are the things which you need to understand in respect of revenue recognition. Okay. So which means if you have any contract other than the construction contract, what will be the basis of revenue recognition? I would say some of these things that we have covered should be good enough for you to answer the requirements related to revenue recognition. Okay, nothing beyond this is required to be looked at by you. Yeah. But at times you may come across some different situations as well. Or you can say some specific situations as well, wherein some of the other points are also required to be considered. Okay. Now let me just try to discuss this concept once again, and then I'll discuss some of those special situations as well. Now, every time whenever the revenue is required to be recognized, what do you need to remember? The most important condition: transfer of significant risks and rewards. Okay. Now, please remember, every time you will look for the revenue recognition, this condition should be fulfilled. And if you come across any special situation, okay, or any case scenario, any fact pattern, what is it that you need to assess? First thing you need to assess is whether there is a transfer of significant risk and rewards attached to those goods to the buyer or not. Now, for doing this, we will take up some special scenarios as well. But the underlying concept, even in those special situations, is not going to change. Yeah? So, the thought process which you always need to understand is that this is the underlying concept. So this concept is not going to change at all for any type of revenue recognition. So at every point of time, if let's suppose in the exam you get stuck, okay, you are not clear. So what should come to your mind immediately? This condition. So just try to apply this. The moment you feel that yes, this condition is fulfilled, that is when you will be able to recognize revenue and not otherwise. Okay. Now, we'll try to look at some situations as I just told you, some special situations. In all of those situations, we will try to apply this concept only. We'll try to apply this concept only, and then we'll try to find out whether through the application of this concept, revenue can be recognized or not. Okay. So what I'll do is, I'll just straight away take you to one special situation. Example number 5. Now, in this case, what do you have? XY sells goods worth rupees 50 lakhs on 20th February, or let me just put this over there only. XY sells, so we have this party XY sells goods worth rupees 50 lakhs on 20th Feb. Okay, so on 20th of Feb 2000x1, these goods have been sold by XY to AB. So who is the buyer? AB. So these have gone to AB. AB is facing storage capacity constraints at its warehouse. All right. So now, even though the goods are sold by XY to AB, so there's a problem with AB. What is the problem? AB says that I don't have the storage capacity. Okay. Maybe these are, there's a good volume of the goods. Okay. But AB doesn't have adequate space to store those goods. All right. Therefore, AB instructs XY to hold the goods at the warehouse of XY. Okay. So what AB has done is AB has requested XY that please keep the goods with yourself. Okay. So let's suppose this is the premises of XY and this is the premises of AB. Now premises of XY is where the goods will continue to lie. Even if those are sold, XY will not dispatch the goods. Why? Because AB has asked XY to do this. All right. And AB has requested XY to deliver these goods on 15th of March. On 15th of March. However, all the risks and rewards associated with those goods are deemed transferred to AB Limited. Okay. Now, the question is that on this particular date, there is a transfer of risks and rewards. So what does it mean? It means that even though the goods are lying at the premises of XY, who owns these goods? Can you tell me? Who owns these goods starting from 20th of Feb? Can you tell me? Starting from 20th of Feb, who will be the owner? AB. AB will be the owner. Number two, if let's suppose after 20th of Feb, so we are talking about this time frame, till the time the goods are not dispatched, if there is any damage, if there is any loss to these goods, then whose responsibility will that be? Will it be of AB or XY? The responsibility will be of AB. So AB will be responsible for that. In respect of the payment of these goods, it may happen that the payment is received on 20th of Feb. It may happen that the payment is received on 28th of Feb. So can AB say that the payment will not be made to XY till the time it is not dispatched? No. No. XY may or may not receive the payment, but as regards the payment to be received, there is absolutely no doubt. Okay. So in this case, even though the dispatch will take place on 15th of March, when should you recognize revenue? Tell me, when should you recognize revenue? 20th of Feb. 20th of Feb. Should you wait for this revenue recognition till 15th of March? The answer is no. Why? Because on 20th of Feb, in relation to this sale, risk and reward has been transferred to AB. Okay. In this case, buyer has not taken the delivery, but it's not XY who is at default. Seller has not done this because buyer has requested the seller for the same. Okay. Buyer has requested the seller for the same. Now, in this case, some of the conditions are required to be fulfilled so that this criteria of risk and reward is met. Please remember, why are these conditions required to be fulfilled? So that the criteria of risk and reward is met. So that's why now some of the points that we are going to look at are all in relation to the risk and reward. So we are not going to discuss or cover any new concept. No, the concept remains same. You can say for that particular concept, it's an illustration or it's an example. Okay. Now, what's the example? At times, delivery may be delayed by the seller. Why? Because the buyer has requested for delay in delivery. Buyer has taken the title. Buyer has accepted the goods. Okay. In that case, the only thing that the seller should ensure, now we are talking about seller, that the goods which are kept by the seller should not be mixed up with other goods of the seller. They should be separately marked. Means, let's suppose seller has got 100 goods. 10 are now the one which belong to the buyer. So those 10 should be marked that these are the one which belong to the buyer. And they should be clearly identified. They should be marked. They should be kept at a place, okay, which is, sort of separately identified. Means those goods should not be mixed up with other goods. So this is the only thing which seller needs to ensure. If that is ensured, then seller need not wait for the delivery. So whether that delivery will take place after 3 months, 6 months, 1 month, 2 days, it doesn't matter. The day when the sale has taken place, the day when all of these conditions have been fulfilled, okay, all of these conditions have been fulfilled, revenue will be recognized by the seller. Clear on this? Everyone clear on this? Yeah? Everyone clear? Any questions? Okay, Larry has a question. Larry is asking, sir, if XY agrees to receive the payment on the dispatch day, then AB is only responsible if the damage occurs? Yes, but even for the collection, XY is not at any sort of risk. Why? Because it's like they've agreed as to when the buyer will make the payment. Okay, so it's not necessary that the buyer has to make the payment within 2 days, 5 days, 10 days, or 15 days. That may come maybe after 3 months also. Huh? It doesn't matter. Okay. So Tambeshwari is asking, sir, in this case, when should the revenue be recognized? In fact, that is the question which you need to answer now. What do you think? When should the revenue be recognized in this case? 20th of Feb or 15th of March? You tell me. If you have understood the concept, you tell me when should this revenue be recognized by the seller? Tell me, Tambeshwari, waiting for a response. When should this revenue be recognized by the seller? 20th of Feb. Yes, that's exactly correct. Yeah, because on that particular date, risk and reward attached to the goods have been transferred to the buyer. Okay, clear? All right. So now, at times, we may also have another sort of situation. Now, what is that situation? That the goods are sold to the buyer, but the buyer has a condition. What is the condition? That till the time buyer doesn't give the approval, approval means it's a kind of acceptance that yes, I have received the goods and I'm fine with the goods. So many a times you would know that the buyer will receive, buyer will inspect, and if the buyer is okay with all the goods, that is when buyer will say, okay, it's fine, and now we are good to go. Okay, in such a case, because there is a term which is attached in the contract. Now, what's the term? What's the term? That even though seller has dispatched the goods, or you can say delivered the goods at the buyer's location, but till the time those are not approved, those are not accepted by the buyer, so it's a kind of green signal which the buyer needs to provide. Can you recognize revenue? The answer is no. You can't recognize the revenue. Okay. Now, let's try to look at one example around this. Say there are two parties, A and B. So what is agreed between both the parties? That till the time B doesn't approve, risk and reward will not be taken up by B. Yeah. Now let's suppose A has dispatched goods on, say today we are on 2nd December, right? And the goods will reach the location of the buyer on 4th of December. Okay, so this is the date of dispatch. This is will be the date of delivery. And let's suppose next day, 5th of December, is when the buyer provides the approval. Now, in this case, when do you think revenue should be recognized by A? 2nd December, 4th December, or 5th of December? Over to you. When do you think revenue should be recognized by A? Hardik, Kushi, Abhishek, they are saying 5th of December. I think Tambeshwari says 2nd of December. Okay, Jinki says 5th of December. Great. Nitin says 5th of December. Yes, of course. It will be 5th of December. Why? Because both these parties have agreed. What are the terms and conditions which they have agreed on? That B needs to provide approval. Now, let's suppose on 4th of December, if you recognize revenue, but on 5th, B doesn't approve it. Let's suppose on 2nd of December, if A recognizes revenue, but if B doesn't approve it. So can we say that on 2nd or 4th, risk and reward in relation to those goods have been transferred to the buyer? Clearly no. Why? Because buyer will take up this risk or rewards attached to those goods only on which date? 5th of December. Understood? Clear, everyone? Yeah? Everyone clear on this? Okay. Now, another example. Huh? Let's suppose there are two parties, A and B. Now, they have agreed that the risk and reward will be considered as transferred to the buyer only when goods are actually received by the buyer. Goods are actually received by the buyer. Understood? Yeah. So now in this case, now let's suppose there are three dates. Say 2nd December, that's the date of dispatch. then 4th of December when the goods are delivered to the buyer's location. So that's the date when the buyer has received. And let's suppose after that, on 5th of December, buyer has done some sort of internal inspections, etc. And he seems to be okay. So there's an approval internally on the goods. Now, in this case, considering the terms which have been agreed between buyer and the seller, when do you think A should recognize revenue? Over to you. When do you think A should recognize revenue? Kushi says 4th of December. Sukhveer, Abhishek, they are saying 4th. Neha says 4th. Ardik says 4th. What about others? Tameshwari says 4th. Yeah, Asta, Vivo, Nitin, they are saying 4th of December. I think in this case, buyer should not wait for this date of approval. Sorry, seller should not wait for this date of approval. Why? Because it's not relevant. On this particular date, the moment the goods are delivered to the buyer's location, responsibility of seller is completed. Risk and reward attached to the goods is transferred to the buyer. So that's why on 4th of December, revenue will be recognized. Okay. Same is the response from Nancy and Ankit, Yuna, Priya. Okay, sorry, I think Priya had a different answer. I'm hoping Priya, you're clear on this now. Okay, so Priya is asking if the approval is on 3rd and the delivery on 4th. See, it doesn't matter. Huh? When is the approval date? Important thing is that when is the condition which has been agreed between both the parties? When is the condition which has been agreed with both the parties is completed? Okay. If you say that the risk and reward will get transferred on 4th, that is the time we will recognize revenue. Okay. Larry is asking, sir, can we relate this approval basis with the GST concept? There it says if the buyer do not give the approval within 6 months, then it should issue the invoice after completion. No. See, GST is a different law altogether, and accounting is not driven by GST rules. Okay, or you can say they do not talk to each other in respect of each and every point. Huh? So there could be gaps between these two. So for accounting, what do you need to follow? Accounting standards. So that's how you'll go. Don't mix up GST. If you do that, you'll only create confusion for yourself. Okay. Yeah. Hardik is asking, sir, if in between we have this 31st March. So no, see, it doesn't matter that in between you are getting your reporting date or not. Why? Because there's no cutoff as such which you need to follow. You are not recognizing on proportionate basis. See, 31st March, all of these things will be relevant when you are recognizing something on time basis. There's no point of time over here. It's a particular day when the risk and reward gets transferred. And that's how you look at it. Okay, clear? Yeah. Tambeshwari is saying this condition we studied in foundation. Very good. So this is not new. Huh? Anyways, this revenue recognition is quite settled. Okay, it's very common. Huh? Okay. Now let's look at one more situation. Okay, which is slightly different. Okay, in terms of its appearance, I would say it appears to be slightly different, but even in this case, you will find the application of the concept that we have discussed. Now, Please remember all of these situations that we have discussed so far. You would have seen the application of the same concept. And what is that? Transfer of risk and reward. Okay, and that is something you need to assess at every point of time. Okay, now with the same thought process, with the same concept, you should be looking at this example as well. All right, yeah. So let's look at this sale and repurchase arrangement. Now, what do you mean by this? Let's look at this with the help of an example. On 1st of January X1, KJ sells goods at invoice value of 5 lakhs to TH. So we have the seller KJ, buyer TH, and there's a sale of 5 lakh. At the time of sale, KJ has agreed to repurchase these goods back from TH on 31st of March at a price of 6 lakhs. Means on 1st January itself, another contract has been entered into by both these parties. So what are they doing? One, they are saying there's a sale from KJ to TH, and at the same time there's a repurchase from TH to KJ. Now let's understand this. Okay, so it's something like this. On 1st of January, KJ is selling to TH. Okay, there's a sale. Okay, and it meets the criteria of sale. Yeah, but on this day itself, means on this very day, they have also executed another contract, or you can say within the same contract, they have also added one more clause. And what does it require? It requires that on 31st of March, what will happen? Same goods, these same goods will move back from TH to KJ. Okay, same goods will move back, or you can say sold back from TH to KJ. Okay, now I have a question for you. Forget about accounting and anything else. Let's look at this transaction logically. Okay, forget about accounting requirements. All of those technicalities, please ignore for the time being. Let's look around this transaction logically. On 1st of January, when KJ is selling goods to TH, the value is what? 5 lakhs. So that's why what will happen? KJ will receive 5 lakhs from TH. KJ will receive 5 lakhs from TH. And on this very date, so we are not on 31st of March, on 1st January itself, KJ says that I'll buy back these goods from you. Same goods I'll buy back from you. And at that point of time, I'll pay you 6 lakhs. So logically, just think about it, that for the goods which are getting sold from KJ at 5 lakhs, KJ is happy to buy those goods, exactly similar goods, after 3 months at a higher price. Okay. So in this case, do you think that actually any sort of risk and rewards attached to these goods seems to have got transferred to TH? Tell me. Tell me. Can we say there is a transfer of risk and reward from KJ to TH? Hardik says no. Yeah, clearly no. Why? Because today KJ is assured that these goods are going to come back to me. And TH also understands that only for this period of 3 months, TH is required to keep the goods. Can TH sell these goods to a third party if TH requires? Can TH sell these goods to third party if TH requires? No. So that's why, can we say that TH has got the risk and rewards attached to these goods? The answer is no. Answer is no. Okay. So now let's try to understand as to what is it that they have been trying to do. So actually it appears that today KJ required some funds. Okay. KJ was in need of some funds. So what did KJ do? KJ sold these goods, or you can say transferred. Actually, it's not a sale. KJ transferred these goods to TH as a security, and took a loan of 5 lakhs. And after 3 months, KJ is saying, I'll get my goods back and I'll pay this 5 lakhs back along with an interest of 1 lakh. Can we say that or not? In essence, it appears to be a loan transaction. Yes or no? If you look at this transaction, in essence, it appears to be a financing transaction. Yeah, Archana says yes. So that's why, how should you record this? You should record this as a financing transaction. Why? Because in this particular transaction, there is nothing in relation to transfer of risk and rewards from the seller to the buyer. So that's why in this transaction on 1st of January, what will the seller do? Or you can say KJ do. KJ will record the loan. Bank debit to loan. Bank debit to loan. And on 31st of March, when this loan will be repaid, what will KJ do? Once again, KJ will say loan debit to bank, and this additional payment of 1 lakh will be recorded as interest expense. Will be recorded as interest expense. Understood? Clear on this? Yeah? Clear on this? Any questions? Any doubts? Yeah? Any questions? Any doubts? Any questions? Any doubts so far? No? Any questions? Any doubts? No? Clear? All right. So quickly, before we move further, okay, on to the, so we have got some more concepts around it. Huh? So I'll just quickly discuss some small concepts with you. So many a times what you may see is that in respect of the sale, a trade discount is given. Trade discount, you can say, is a discount which is offered on the invoice itself. That is called as trade discount, or volume rebates are given. Now, these trade discounts or volume rebates are required to be deducted from revenue itself. So you don't record that as an expense. What do? You will reduce the amount of revenue. Okay. But at times you see cash discounts are given. Cash discounts are given. Now, what do you mean by cash discount? Say, for example, today you have sold goods worth of rupees 100 to a party. Okay. And as per the agreed terms, you will receive the money after 3 months. Okay. So there's a credit period of 3 months. But you have also offered to the party. So what is your offer? That if you make the payment within 1 month instead of 3 months, then you will give some discount to the party. You will give some discount to the buyer. So in this case, This discount which you offer is called as cash discount. So why is this discount given? For early receipt, for early payment by the buyer. Okay, such a type of discounts are taken to the cost. So they are recorded as an expense. They are not reduced from the amount of revenue. Understood? Yeah. So there could be two types of discounts. So if there's a trade discount, you will reduce that from revenue. If there's a cash discount, you will not reduce that from revenue. You will record that as expense. You will record that as an expense. Okay. Everyone clear so far? Any questions, any doubts if you have? Any questions, any doubts if you have? No? Tell me quickly. Arthik is asking, sir, so entry will be P&L to cash discount? Not P&L to cash discount. Cash discount you will debit. Why? Because it's P&L. Okay, two party. Because your party's balance will go down. Yeah, cash to party, cash discount to party, and cash discount is something which you will take to P&L, or you can say P&L to party. So that's how it will look like. Okay, clear? Larry is asking, can we say it's a sale and leaseback transaction? Are you talking about that sale and repurchase? Are you talking about that? If you are talking about that, that's not sale and lease back. That's sale and purchase back. Okay. Lease back is wherein you will get the item through lease. That is different from sale and purchase back. Okay. Completely different. Huh? All right. Yeah. Any more questions? So I think maybe we can just now spend some time on your questions, doubts that you may have. Yeah. Instead of moving further, you'll have some questions, doubts. If you have some questions, doubts, you may let me know. We can take up those questions, doubts now. Yeah. All right. Yes, I understand. Archana has a question. Yes, Archana. Yes, Archana. Please go ahead. Huh? What's the question you have raised hand? Quickly, yeah, please. Anyone else? Any? Okay. So, Nisar, can you please unmute? Nisar, can you please unmute? Can you please
Already
unmute?
unmuted, sir.
I think they will ask questions now.
Sir, they are already unmuted.
Okay, Archana, please go ahead.
Sir, in the above example of TH and KJ, what if this TH is not can't able to pay the interest of 1 lakh? What will happen in that situation, sir?
No, so TH is not required to pay the interest. It's the
Okay.
KJ which is required to pay interest.
Okay, sir. What if if the KJ is not having the money and he can't pay the interest? What happens in that situation, sir?
So again, let's keep it very simple. So it's like a loan. Okay.
Okay.
Let's suppose KJ which has taken a loan from TH. Let's suppose later on financial position of KJ is not good, because of which KJ is unable to pay say 1 lakh or say 3 lakhs out of 6 lakhs. So you should look at it as if 6 lakhs is the amount of loan, means principal plus interest, which KJ is required to repay to TH. Okay. Now what
Okay,
if KJ doesn't have funds? There will be a default. There will be a default.
yes,
Yeah.
yes.
So TH accordingly will have to book the loss. And that is something which will be a kind of income for KJ. Okay. So you can say, let's suppose on 31st of March, say we are on 31st of March. Now in the books of KJ on 31st of March, what is the amount of liability? It comprises of two things, interest and principal. Correct. So this is 1 lakh. This is 5 lakhs. So all in all, the amount of liability is what? 6 lakhs. Now, out of these 6 lakhs, if KJ is only able to pay 6 lakhs, out 3 lakhs, or say 4 lakhs. So what will KJ do? KJ will say TH debited or loan debited or loan plus interest debited, whatever be the case, 4 lakhs to bank, 4 lakhs, and remaining amount will remain outstanding. If let's suppose KJ has reached a situation, say KJ has gone bankrupt, so nothing is repayable and it's final settled, so that remaining loan will be written back. Okay, that 2 lakhs will be written back to the P&L. So that's how it will be done.
Okay, sir.
Okay.
Thank you, sir.
Yeah.
Okay, sir.
All right. So then I can see this question from Priya. So Priya is asking, sir, in example number 3, they are able to sell their inventory because of the research. So isn't it that the revenue of 50 crore should come under their normal revenue? And what is 30 crore? The expenses incurred on the research or the revenue? See, let me just go to this example number 3. What I remember is that this 30 crore was the expenditure incurred on research. Okay, so 30 crore is clearly the expense, Priya. Fine. For the pharma company, which pharma company would have already recognized. Now, in relation to this 50 crore, this 50 crore is clearly an income of pharma company. There's no doubt about it. But this income is not revenue. Why? Because business of pharma company is not to conduct research and then sell the research. What is their business? Their business is to manufacture or come up with a new product, basis that research, and then sell that product. That's why we are saying it should not be recognized as a revenue. Understood? Yeah. Okay. Then I think this next question is from Hardik. He's asking, sir, can the sale of the asset and sorry, I'm not clear on this question. Okay, Hardik is asking, can TH book the sale and then recover loan? See, there are a lot of things. Okay, that's a transaction. So you're saying, can he enter into such transaction? Of course, whatever he'll do, he'll recognize. The point is that for the current transaction that you look at, how should that be recorded? So that's the point you need to look at. Okay. Okay, so then I think Ankit has a question around AS7, question 11. So he's saying I need to understand the question. So let me just go to that document, please. Just give me a minute. We are talking about okay, so now what is your question, Ankit? Question 11. Okay. So which page is that? If you can just, so that will be helpful. If you can just also let me know the page number, because I can't see any illustration beyond 7. Ankit, so if you can just help me with the page number 8.29. Okay. 8.29. All right, so it says RT has a fixed price contract for construction of TAR. Okay, so there's a fixed price contract. TAR is required to be constructed. Initial tender price is 220 crore. At the start of the contract, it is estimated that total cost to be incurred will be 200 crore. Revenue is 220. Estimated cost to begin with was 200 crore. At the end of year one, this estimate got changed. Okay, so the total estimated cost got changed to 202 crore. So life of the contract is 3 years. During year 2, customer has requested for variation in the contract. So now during year 2, what is going to happen? Due to a variation, the revenue will change. So the contract value will be 5 crore, will increase by 5. So now instead of 220, it will become 225. And the cost which got revised to 202, that will also shoot up to 205. RT has decided to measure stage of completion on the basis of proportion of contract cost incurred, means actual cost divided by estimated cost. Okay, and you are also given actual cost at the end of year 1, 2, 3. You are required to compute two things. One, stage of completion means percentage of completion. Second, profit for each year. I think a similar example we have covered in our previous session. Okay. All right. So Tambeshwari has a question. Yes, Tambeshwari. Yes. Tambeshwari, please move ahead. What's the question? Nothing. All right. So you will let me know if you have any further questions, doubts. Okay, because we are done. We are not yet through with AS9. So some part of AS9 is still pending. We plan to complete that in our next session. Huh? Okay. So thanks everyone for your time and for the wonderful participation. But I'm just staying around for your questions, doubts. But if you want to move, you can just feel free, please. Yes. Abhishek has a question. Yes, Abhishek. Tell me what's the question.
Sir, in the multiple choice question of AS7,
AS7, okay.
The first multiple question, it asks revenue to recognized, not the incurred cost. So
Okay.
we can calculate it on the basis of कि कितना percentage basis. Like it had happened, it comes as like 90, which is expected cost, plus incurred cost 30, which is 120. The percentage is 30 divided by 120 is 25%. So we can recognize the revenue 25% of 112 lakh, which comes 28 lakh.
Okay.
The answer will be the option A.
Okay.
And as we discussed earlier, you said 30 lakh will be the answer, but the 30 lakh is the incurred cost.
Right.
And the question asked for the revenue recognition.
Okay.
So that what I wanted to tell कि आंसर 28 लाख होगा. अगर हम 30 लाख कर देंगे तो उसका थर्ड क्वेश्चन का भी आंसर चेंज हो जाएगा.
Understood. So what I'll do is I'll just once again, maybe go through this. Okay, in terms of why this cost has been considered to be a different number. I understand you're talking about that if you change the cost, then the revenue will also change. Okay, so I'll just look at it and I'll come back to you on this.
Okay.
Yeah.
Okay.
All right. Anyone else? I understand Tambeshwari, you have a query. So I think she's asking sale and repurchase in case. I think you have a query around sale and repurchase. So let me just go back to the sale and repurchase. Okay, so in case there's a so this one you're asking. Okay, sale and repurchase in case not revenue recognized. Yes, you're right. So in this case, you don't recognize revenue. Why? Because there's not a sale transaction. Okay, then I think Archana has a question around this new study material. Okay, so I'll make a note of this query, or otherwise I would request you to reach out to the concerned team. It's more of administrative matter. Okay, but I'll make a note of this, or I would request you to please send across your query to BOS team. They should be able to help you on this. Okay. Tambeshwari is asking which date the trade discount. Tambeshwari, I'm not clear. You need to please explain. So maybe you're using few words. Very, very difficult to understand your query. Your query is not clear. Which date trade discount? What does it mean? I'm not clear. In the meantime, if you have any more questions, any more doubts, tell me. Bishri, are you just repeating your question? Please elaborate. Okay, so she's asking recognize revenue which date? Recognize. No, so in respect of sale and repurchase, as I told you, if you are asking about it, you will not recognize revenue because there is no question of revenue recognition. Okay, and of course, trade discount doesn't exist over there. If you are talking about trade discount in general, so trade discount you will recognize same day because it's something which is offered on the invoice. So the same day when you recognize revenue, let's suppose your revenue was 100 on the invoice, and on the invoice you have written a trade discount of 10. So you'll recognize net revenue by 9. So that's how you'll do. Okay, so it's not that you will recognize 100 then minus 10. No, you will just simply recognize net amount. So that's how you'll do. Okay. All right. So I understand we don't have any further queries left. So Nisarg, we can just close our discussion then.